Good morning, Paul Georgi from Allendale. It's August 6, 2010. Well, this morning the grain market's very volatile is the best way to describe it. Overnight we were sharply higher in the wheat, we were lower in the wheat, and ended a little bit higher in the nearby contracts. The range 60 cents plus in the wheat overnight. Corn a 10 to 12 cent range, beans 15-cent range. So a lot of uncertainty here, a lot of nervousness in the grain markets. The outside markets not affecting us too much here this morning. Dollar down 15, crude down 67 right now, and the stock market down 42. Some of the newsworthy stories, and getting highlights on CNBC and a lot of the news programs, the Russian situation, Putin canceling export sales from August 15th through the end of the year. Another story overnight came out that Russia or Putin has said we are not going to allow any grain to be shipped toward the ports, especially the Black Sea area. So from what the stories we're talking about, there's as many as 600 rail cars loaded with grain that will not be unloaded because they are ceasing all exports at this time, which is causing the effect around the world. Force majeure is being enforced in many areas, Asian situations where these brokers have sold the grain out of Russia to other countries. They can't deliver, so they're going to have to fall under the force majeure act and not be able to deliver this, which in turn is causing grain prices and wheat prices to move higher until we can get this situation solved and fill the needs of many of these end users who was counting on this grain, and especially wheat, to come into their countries and into their ports sometime here in the next 4 to 6 months. So U.S. should benefit from it. That's why we're seeing so much strength in the September contract and the December contract of wheat here in the U.S. markets, especially the Chicago Board of Trade Mercantile Exchange. The funds were huge buyers yesterday. Numbers suggest that they may have bought over 20,000 corn contracts yesterday, which doesn't bode well when you look at the price of corn at the end of the day. We were up sharply. We were well off of those highs. Overnight, we are lower in the corn market, giving us an indication that maybe we've run the course here. The next big issue, it will be the USDA report next week on August 12th. We're going to get some indication there of what kind of yield the USDA is looking for. Many forecasters are now coming up to Allendale's level of which we've been saying all along, a 167 yield. Other forecasters are starting to raise their expectations to what we've been saying. The shift in feed from feed usage and feed demand has been a story here that's been focused a lot and certainly has some influences. Feed wheat has increased in value, which recently feed wheat was about $24 a ton cheaper than corn. Since the rally, we were about $40 higher price than corn. So there will be some shifting there, is what the expectations is. But when you're looking at ending stocks where we are and the potential yield that we've got, trade's going to be a little bit concerned about chasing this market higher. So a lot of tug and ebb and flow, you might say, here in the grain markets today. We expect some evening up, expect a lot of volatility, use risk protection, and call Allendale if you got any questions. We can certainly help you through these volatile times. In the livestock trade, we still got a standoff in the cattle. From latest reports I've heard, packers actually have lowered their bids to 91 to 92, Feedlots still holding out for 94 to 95. We expect somewhere in between, probably a steady price at $93 is where cattle will trade. We need to get these cattle traded here today, and we may be waiting till the last minute until somebody blinks in order to get these cattle moved. But cutout values were mixed yesterday. Choice down 58, Select up 33. Chart-wise, the cattle market still looks strong. We're up near the upper end of this long-term trading range. At $97 is our basically our resistance in the October contract. Support comes in around the 95.60 area. Hogs, they definitely took it on the chin yesterday with markets being down sharply. We're down overnight another 100 to 120 points in the pork complex. Cutout values there down 85 cents. More of a fund situation than a product or fundamental situation. The funds came in yesterday, sold hogs, and one domino after another went through the 10-day moving average, went through horizontal support, and then this morning we're below the 100-day moving average. So we need to find support there around $74 in the October contract, or I'm sure there'll be some more stops triggered below that if we start taking that level out. So you need to stay close to Allendale Research. We'll try to guide you through these volatile times. Give us a call, 800-262-7538, or check us out on the web. We've got an email that we've just started here, the Allendale Wake Up Call. We'd be glad to get that to you. We need your email address. Sign up for that on the web. We wish everybody a very successful trading day. We'll talk to you on Monday morning. Thank you.